the local index will be hoping to benefit from some global positive sentiment. The markets remain concerned about the world economic outlook, with a hawkish tone from the central banks, raising the concern that an aggressive fight against inflation will push many countries into a recession. Now, Jimmy Moyaha is an independent analyst who's going to take us through some of what is happening on the markets in early trade. Give us a sense of how the JSE is performing this morning, Mr. Moyaha, and taking in particular regard the China's economic outlook and the U.S. earnings, which have hammered the JSE in the previous session.
Good morning. We're seeing the JSE perform weaker this morning in early trade. We're still feeling the effects of that outlook revision for China. The GDP for China growth has obviously been revised down, and we've also seen that outlook and forecasts from tech companies in the US that have been reporting are not looking as well as previously forecasted. We're seeing the top 40 sit just above the 61,000 points mark, sitting almost about 1% lower since then, and we're seeing some of the stocks on the top 40 recover. We saw yesterday that Naspers and Prosus were some of the biggest movers to the downside. Today they've started off early morning trade slightly bullishly. We've got Sibanye and Kumba down marginally about 1% each. You've also got Anglo down about 2.5% as well. So overall, we're seeing some signs of a bit of a reprieve, but we're also seeing that the global outlook and the global concern is still weighing heavily on sentiment, and that's still going to be filtering through into the markets in the coming days, I think.
Let's talk oil prices, which rose in early trade on the back of the tight supplies and the prospect of rising demand. Talk us through those developments.
Certainly. So, I mean, we're about to head into U.S. summer season, and that's typically one of the big times where the U.S. increases its consumption of crude oil as travelers tend to go on holidays more. We've got Memorial Weekend coming up in the U.S., and that's this Memorial Weekend is set to be the busiest in a very long time, which will drive up fuel usage and fuel demand, and in turn drive up oil prices. We're obviously still seeing the impact of the tensions with Russia and the Ukraine and the supply. We know that Russia is, of course, the largest supplier globally, or second largest supplier globally, of oil, whereas China remains the largest importer and the U.S. remains the largest consumer. From a supply-based perspective, the sanctions being imposed on Russia are constraining the price of Brent or the supply of Brent, and therefore driving up the price there. So overall, from an oil front, we know that Europe and in particular France is still lobbying for the sort of movement away from, or the reliance away from Russian supply in terms of oil. We know that the U.S. has also sent a team to India to see if they can encourage India to import less of or buy less of the Russian oil in a bid to increase and tighten the sanctions. All of this is obviously driving concern around the oil market and driving the prices a lot higher because of those supply concerns.
Yeah, let's talk company news. Tiger Brands holding its dividend for its half year, which ended in March, but at the same time issuing a warning that further cost pressures are inevitable. How is their performance looking in the period under review?
Tiger Brands had a fairly okay reporting period. They reported revenues up slightly, about 2%. They reported that their operating income was actually down, along with their group operating margin. And the operating margin they cited was affected slightly by the increasing cost pressures that they have to deal with and the increasing cost related to certain raw materials. They did also outline that their performance was affected adversely by things like the civil unrest in July, but also by the performance of their brands, Beacon being one of them, and Albany being another, with the impact on bakeries that we saw as a result of some protracted strikes in both of those spaces with both of those companies. So their overall performance leaving investors somewhat confused. I mean, the share price is trading up some 5% for the day, but earnings per share and headline earnings per share did decline in the previous reporting period. I think the most concerning thing for Tiger Brands that they've outlined is that concern around those cost pressures, because they impacted the gross profit margins and they brought those margins down below the 30% level for them. They did also outline that from the July civil unrest, they did receive insurance payments of about 144 million rand in that respect, and around 17 million rand with respect to the recall that they did earlier on the late last year on the Hugo products that they had.
Yeah, let's conclude the conversation with Glencore. Some of its units agreeing to plead guilty to a list of charges that range from bribery and corruption in South America and here in Africa. Talk us through those developments.
Certainly. So Glencore, this has been an ongoing case for Glencore for the longest time, and they've finally agreed to plead guilty. They're expected to pay some $1 billion in fines to the U.S. government, some $40 million in fines to the Brazilian government as a result of or in an effort to conclude this matter that's been hanging over them for the longest time. Glencore is said to have paid a few million in bribes to secure some of the relationships that they had in the past. But in the scheme of things, I mean, Glencore had initially set aside about $1.5 billion for the settlement of these particular claims, and they're expecting that the settlement will come in line with that. We've seen the share price sit just about 2% higher so far in early morning trade as a result or following this. So the expectation is that the payment or the fines that they will be incurring will not be more than what they've budgeted for. And if you look at this in the scheme of Glencore's production, they're expected to turn over or bring in about $17 billion in this year. So that's probably not going to be too concerning for them that they have to pay the $1.5 billion in fines. I think the bigger relief for Glencore at this stage is that they're able to move on past this and able to get back on track with certain production, with certain management issues that were hanging over their heads along with these cases.
Independent markets analyst Jimmy Moyaha, thank you very much for that markets update.